Hello, everybody. I'm speaking with David Jones, Chief Market Strategist from Capital.com. Hello, David.
Hello to you.
David, I want to talk to you about the Brexit because the Brexit topic is back. How do you feel the situation on the British pound? Can you sense the fear?
I think there's definitely some concern towards the pound. We've seen the pound slide over the last few days against the US dollar. We've seen the euro gain against the pound. And the worry is, the government in the UK has said a deal will be done by the end of the year. There'll be no extensions, no changes. Some politicians have been asking for an extension to having to get a Brexit deal done with the European Union because of the coronavirus has delayed negotiations. But so far, at least, the UK government is saying, well, we're going to stick to our original plan. And the worry is that we won't end up with the sort of deal that works for the UK. So I think it's going to dominate probably the headlines again in the weeks and the months ahead. But for now, the pound is under a little bit of pressure. We've had economic data out this morning for the UK economy showing that in January to March, it shrank the most for almost 40 years, I think, in that period. So it shrank by 2.2%. Brexit won't be helping that. But I do wonder, now the bad news is out there in the short term, will we see the pound recover for the rest of this week? Because it has been quite hard hit. So I think the pound against the dollar, euro against the pound is a really interesting market to watch this week.
So in 2021, there will be no Brexit topic because it will be all over.
I bet. I think we will still be talking about it probably for years, even if a deal gets agreed this year. I think if anything goes badly in 2021 from the economy point of view, those who are opposed to Brexit will blame it on Brexit. If something goes well, those who support Brexit will say it's because of Brexit. So I think in the UK, this particularly I think a media obsession talking about Brexit isn't going to go away. But I think the focus, after clearly being focused on the virus in recent weeks and months, and we still have problems here with a local lockdown for the city of Leicester because their numbers are still high. But I think perhaps we'll see a shift more to talking about Brexit. So I don't think it's going to go away into next year.
Okay, so leaving Brexit for a moment, tomorrow is the day of European PMIs. Do you think that this data can surprise market participants?
I think it definitely can. We had some PMI data last week that was slightly better than expected, and it's always an interesting piece of data, this, because it is forward-looking. It's the Purchasing Managers Index. We are seeing economies slowly recover, I think, over recent weeks after the lockdowns are gradually being lifted. So the PMI data is important to see what the market thinks of it. Are we still seeing confidence in business? So I think it could well, if it's positive and quite a big leap from expectations, we could see quite a volatile reaction from markets. But they'll really be looking to see, does the PMI data confirm that economies are still recovering?
A main topic of this week is non-farm payrolls in United States. Analytics says that forecast is 3,037,000 new jobs. Isn't that over-optimistic forecast? We have to remember that the US and, of course, global economy has serious problems.
Well, I think it's been really hard, not surprisingly, to forecast in the last couple of months, really, for the non-farm payrolls. Last time round, I think a negative number was expected. We had quite a massive positive. That was a surprise. And I think it's really difficult because clearly, again, as the US has come out of lockdown, we are going to see perhaps more opportunities in terms of jobs. So I don't think the forecast of plus millions is maybe that surprising. But as usual, I think with this number, it's going to be how much different is the actual number to what the market is forecasting. That's what's going to cause the volatility. We've seen already, I think, a pretty volatile start for US stock markets yesterday. They had a very weak finish last week on Friday, a strong bounce back yesterday in the US. And I think perhaps it's still more important, or equally as important as the payrolls, is this surge that we've seen in coronavirus cases in the US. So I think that is going to be as important. And I just think the payrolls number is incredibly hard to forecast at the moment because economies are in, it's something we've never seen because of these shutdowns. So don't be surprised by a massive positive number.
One thing is the non-farm payrolls, and the other thing is the average hourly earnings. We look at the forecast, and this average hourly earnings is going down. You think this is a real problem to the American economy, to the US economy?
I don't think so. Like I say, I think at the moment, because if we're looking back over economies over the last 2 or 3 months, it's such a unprecedented period for economies that I think for now we have to take the current data and accept it is somewhat out of the norm. I'm sure, so I think I wouldn't get too worried at the moment by jobs data and hourly earnings data. I think it's more going to be, well, what does this look like in 2 or 3 months' time? And I think the financial markets, are not putting as much weight on things like non-farm payrolls and other employment data as they were 3 months ago. I think because they recognise, well, everything is very strange at the moment, and we need to see what this looks like when economies are maybe back to a new normal in a few months' time.
What's your view on the main currency per euro-dollar?
I think we've seen some weakness for the euro last week. We did see the US dollar gain some ground and get back some of its recent losses. And I think part of that was driven by some of the nerves we had in markets. We saw stock markets fall fairly heavily last week because of the continued spread of the virus in certain US states. So I think we saw the US dollar acting as a safe haven, people looking for a safe destination for their money. That helped the dollar and pushed down the euro. This week, I think, as I was saying, with the pound, perhaps the pound and the euro have slid far enough for now against the US dollar. With stock markets bouncing back yesterday, investors seem to have more of an appetite for risk at the start of this week. So perhaps we will see the euro recover against the US dollar. That's what I would be looking for this week.
And what's your view on the British pound cable, British pound to US dollar? Do you seems to be, are you an optimist looking at the pound, or maybe you are fear of something, for example, Brexit?
I'm an optimist at the moment. I think for the next few weeks from here, we've had this weak economic data out today for the pound, showing that our economy in the UK shrunk by 2.2% in the first 3 months of the year. The pound had been sliding for the last few days. At the moment in early trade in London, it seems to be trying to stabilise. So I do wonder, after some reasonable slides over the last few days, will we see a short-term bounce back for the pound? So for me, I'm optimistic from here for the rest of the week, and we'll see where we are next week.
Okay, and final, looking at the London Stock Exchange, FTSE, what's your view? What's your view? Should investors, do you think that investors will buy stocks, they will go more like risk on, or they will try to, step aside and looking what will happen?
I think there's a chance of maybe a gradual recovery this week. I think towards the end of last week, we did see heavy slides in stock markets. We've started the week a bit more stable, but I think investors are maybe a little bit unsure now. The stock markets have come back a long way since the March lows. So in 3 months, they've recovered very strongly. And I think at the moment, definitely the best of that rise is behind us. So I think we're slightly positive this week, but perhaps week to week, the market just trades sideways for a while from here. So fairly, I think investors are almost waiting to see what happens next with economies.
David, thank you very much for this interview. Thank you for your analysis and commentary. David Jones, Chief Market Strategist, Capital.com, was my and your guest. Thank you very much.
Thank you.